Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good weekend, all. Ira Epstein of Linn Associates with your financial wrap-up. And this is your weekend edition, which is different than the daily edition, because we're going to first look at a monthly chart, and then we're going to look at weekly charts. The markets are closed at this time. You finished down for the day in the NASDAQ, but the late-day quotes were higher, and these prices, you were up higher than this in just about all the indices. The gold market finished off here up 20 cents, but I'm telling you, the late-day quotes were $5 higher. Silver down, but it was actually higher on the day in the late-day quote. So you'll see how that all works. Remember, some of these markets, including stock indices, while the trading ends at 4 p.m. Central Daylight Time, the settlement in stock indices is at 3:15. When you go to the metals, the settlement price is determined at 12:30, but they trade to 4 p.m. Central Daylight Time. And no, don't blame me. This is the exchanges doing, not mine. Crude up for the week a little bit. We're seeing that the bonds and notes today didn't go much of anywhere. Grain market sort of mixed on the day. And the news of the day was the big break that we saw in the dollar index and the strong rally in a number of currencies. That could be part of the fact that the U.S. and China low-level ministers are going to meet, and they're not, I don't mean that in a derogatory manner. It's just the lower level, not the big boys, are going to meet in August to try to set a framework for a meeting in November. That's what came out today between President Trump and Xi. If that goes ahead, it's probably a good thing. But I doubt they'll meet because they'll both save face if there's no point in meeting and China's not going to give. And I can tell you already, and that's if China doesn't give anything, President Trump, he's going to want most of the things he said. It's the question is how much does he want it, and is he going to get parts and parcels, and that's where you'll know. The other event, of course, was the Turkish lira, which plunged this week. All the rating agencies, the major ones I follow, lowered Turkey's credit ratings today. The Turkish people are on holiday next week. It's a national holiday. The banks will be closed. What if there's a run on that currency? I don't know how that all works. I would imagine they have a mechanism in place. But when you go to the charts, we'll start this one with a monthly chart. If you look at the 18-month moving average of closes, you have not been under this since 2016. Just something I like to bring up to show you what the market has done. When you go to the weekly chart, you haven't been under since back here. Got it? Right in May. And the market has stayed above it. We're knocking on the door of trying to get through the all-time high close of 2874.50. You can see on a chart, and this is a bar chart, each bar represents a week, how the market has been climbing in this channel to the upside. I find it interesting because I think that I started the year off saying that I thought that the market would be strongish, then pull back, have a summer where you churned, and then make a run for the all-time highs again. Well, you didn't break as much as I thought in the summer, but you didn't go for the all-time high. It's still summer. I could be wrong, but just an interesting point there. When you look at the moving averages, we're over the 18-week average, which is over the 100-week, which is over the 200. That's called a bullish setup in moving averages. Where's the resistance? Well, you're knocking on the door. You keep hitting the upper Bollinger Band and backing away from it. This is called riding the Bollinger Band. It's a little different than the pattern you have here, and it's often accompanied, when this occurs, with momentum locking into bullishness. That's what's happened here. I don't consider in the oscillator slow stochastics on weekly charts that the market is overbought or oversold. The momentum is either up or pointing down. It is still pointing up. That's how I look at it on this. In the NASDAQ, unlike the other indices, you did make all-time highs. You see that there. The momentum is still bullish. The market pulled back for the week, 39 points, whereas in the S&P you were up 15 for the week. The trend remains to the upside. If you were to take out the low of 2 weeks ago, right here, this 71, 66, 75, this could break the bull pattern because you already have a pattern of lower highs and higher lows. Break that and you come down. What about bullishness? Go through that right here, last week's high of 75.05.5, and you end up with a pattern, at least momentarily, of higher lows and higher highs, putting 76.17 in the target. The bias is up, the trend is up, the momentum is still up. In the Dow, you have a market that has a higher high, lower low. The market is trying to maintain the bullish bias by staying over the 18-day average, which it's done. It's rallied back to the resistance at the upper Bollinger Band. It is up 343 points for the week. That's pretty strong, but still not at its all-time high. Another one that you look at there. Then we get to the Russell, which has a pattern of lower highs and lower lows, completely different, not in the bullish pattern. Yes, the bias is up, and the market is doing its best to hang on to some bullishness here. It won't take much to turn that to the downside if the market breaks next week, so got to keep your eye on that. In the VIX, the market is back up to the resistance point at the upper Bollinger Band. Now, in the past, when we've hit that upper band, we have failed. We had one spike, and I think you know about that, right through the market. That was right in February, and that ended. That was when we had that mini crash in the stock market. As fast as it occurred, it came back, and since then, each time you've hit the upper band, well, the market's had some resistance against it. In the 10-year notes, look at all this sideways action. You're caught in the black bands if you look at it going sideways. From sideways action is where trends develop. This will set up a long-term trend. If the market breaks out to the upside, believe it or not, you'd have lower interest rates. If it breaks out to the downside, you would have higher interest rates because it's an inversion market. The bias is up because you're over the 18-day average. The momentum is up, but you don't have a trend. You have a churn in the market with a higher high and a lower low. In TLT, you have the same thing. This low took out that low. You have a higher high here. You've got that churn pattern going on, and people that are trying to catch trades and make them work with it are probably getting frustrated. They get a very short period of time where it's hanging in there. The dollar index, while it broke today on the daily charts, quite a bit actually, and you finished for the week down 23 points. It gave back the gains today. And that's because I think it got up to that upper Bollinger Band, if you look at it. You closed 95.98, but the high for the week was 96.86.5, and the upper Bollinger Band was 96.76.5. So you pulled back from that pretty nicely, in fact, about 80 points. The question is it anything more than a pullback? Is it a change of trend that's going to develop? I don't see that on the chart, and I don't see it on the euro, which had a big rally today on the daily charts, but the pattern is still lower highs, lower lows, momentum still down, bias down, and a flip-flop of what the dollar did. If you look at the low, 113.27.5, you got down to the Bollinger Band of 113.42, and then you pop back up. The 100-week average is at 114.90. That could be what the market wants to play against. In the Aussie dollar, you know, the seasonals in the Aussie are typically bullish at this time of year for whatever reason. There's always a reason for something. But if any of you watch the more research reports, they give you an idea of what the seasonal studies are doing, and they're typically up. But this market's well entrenched in a downtrend. It did break and hit this week the lower Bollinger Band and spun back off of it, closing over it. But still no sign of a turn of trend. In the Canadian dollar, I think you're getting a series of buying in hopes that a NAFTA deal with Mexico will be struck, that maybe we can then have talks with Canada joining in. Again, I saw the economic minister out of Mexico, along with Mr. I think it's Hastings, one of our negotiators, come out today and say that they think they have the auto parts resolved. I think they're on the sunset clause from the looks of it, and if they can get that done, we could hear an announcement. They're hinting at it next week. We'll see, but that would not be overly bearish for this currency. It was up $0.50 or the Mexican peso. In the Japanese yen, you've run right back to the resistance point. You're against the 100-week and the 18-week average of closes. Momentum has been pointing up. The swing line's up. The trend is not. Why? Because you need to close over 91.02 the upper 18-day average of closes right here. That's the upper average on the chart. And if you did that, you'd get bullish. Right here is the resistance. We'll see if it can do anything. Bitcoin came down this week to 58.50, taking out this low of 60.60. The market's just come down from the 84.90 level. It was a heck of a break over 4 weeks because that's almost $3,000 a contract, and now the market's trying to get its foot under it and see what it can do. Momentum-wise, the market is sort of flat here. You've got a higher high, if we look at that, and probably with this break, you've created a lower low. So you got the higher high, but the lower low, not a trend. Resistance back at the 18-week average. Then one of the things I like to look at is the spread differential between Brent and WTI crude oil. Remember, Brent's primarily the OPEC oil. We'll call it that just so we understand. On the weekly charts, you're still under the key 18-week moving average. So while you're getting a bounce, you haven't convinced me that you've made a major turn. The daily charts have turned in favor of WTI, but the weekly hasn't yet. When you look at the weekly bar chart, this week was a cover your short week in the sense that the market went down to the lower Bollinger Band. Momentum is still pointing down. The trend is down. The bias is down, but you have hit a downside target. When you go to the WTI, 63.91 is the lower Bollinger Band. You got to 64.43. The market is still in a downtrend, downside bias as well. When we come to Rebob gasoline, you've got the higher high and lower low pattern. Again, you know, it's very difficult to trade off of weekly charts, but they're always good to get a bigger, longer-term view. And you've got a market that has hit a downside target while the momentum is still pointing down. In the Nat Gas, we have a higher high, lower low pattern in a tremendous sideways action. It is from this pattern that big moves eventually come about. So you wait to see what it's going to do. Don't go away. If you're watching my videos here, you know, we have a phone app that is free for you to get. We'll give you the user ID and password in it and try it out. My videos will play. When my videos post, your phone's going to give you a beep and let you know that it's there. We're doing away with text messaging and using notifications on it instead. And what those notifications do is they'll pop. They'll tell you what's going on. Put in a price alert. It's going to work. Voice commands. Show me the weather. Here's your weather page. But then you can also get to this.
Current prices. E-mini S&P 500 September is up 2.25 and last traded at...
Imagine you're driving your car and you want to hear your quotes. You get them. You can get charts, quotes, different ways to see your news stories with it. You're going to get my videos to play right over that. Everything you can possibly want all in one place, all built for commodity people. So news, quotes, news stories, as you can see, different types, weather, not for your local weather, my friends, although it'll do that. It's really about radar for precipitation and all over the country. How do you get access to it? It's pretty simple. All you need to do is give us your name and number. We'll take care of it. Give us a call at 866-973-2077. You can always go to our website at www.iraepstein.com, and you can click right up here if you're watching me on YouTube. Just from there, our page will come in, put in what you want, your information. It'll all automatically be sent to you. I'm Ira Epstein. You have a great day, and I'll see you all Monday.